What is going on, investors? Hopefully, you guys are doing well out there. That is right. It is Friday. It's time for the new year, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including Microsoft and Tesla. This week, we will go over the year-to-date declines in all of these stocks and take a look ahead for the new year. Let's kick things off like we always do with Meta Platforms. Start of the week at 117. I am recording this. I'm starting to record this at 11:30 Pacific time, so we've got another hour and a half left in the trade. Right now, Meta trading at about 119. That's about 1.29% gain on the week, but for the year, down nearly 65%. In comparison, the S&P 500 looks like it's going to end the year closer to 20% down. Not a lot of news this week out of Meta. Moving on to Apple, start of the week at 130, melted down by about 1.5 points. End of the week closer to 128. Year to date, this one down about 29%. Apple rebounded a little bit this week as its Foxconn factories that produce those all-important iPhones reportedly running at about 70% capacity in China. Now, the company hit a 52-week low as those estimates on that all-important iPhone product continued to go down. TrendForce dropping its first quarter estimates down. Looks like about 10% from about 52 million units down to 47 million units. I tell you what, a 10% drop on Apple's iPhone is a massive amount of money. Now, Apple unlikely to use a foldable iPad as a replacement to the iPad mini sometime in 2025. This is largely due to the fact a foldable iPad would likely cost a lot more, Apple thinking that the cost of the item more important than it having a foldable screen. Now, Japan and Apple are being fined $98 million for not charging tourist consumption tax. Now, in Japan, if you're in the country for less than 6 months, you're not subject to a 10% tax. However, what they were finding were people were making large purchases to go and resell these items and resell these phones. And in that case, they should be subject to some kind of tax, and Apple's going to pay a penalty on that one. Moving on to Amazon, start of the week at about $84. End of the week down another 1.8%. Finished the week very close to a 52-week low at about $83 per share year to date. This one down 51%. Amazon is planning a standalone sports streaming app. They obviously have those exclusive rights to those Thursday night football game. I think they've picked up maybe some tennis rights as well. They have some other rights in other countries. So it'll be interesting to see if they decide to roll up maybe like sports betting into that. I don't know if Amazon's looking to actually take the bets themselves, or maybe they partner with like a DraftKings or an MGM or something like that. But that's the only reason why I could really see that you'd want this standalone sports streaming app is maybe run more specific like sports betting and gambling apps and ads on top of that. Amazon may market at excess air cargo space as demand starts to erase. Amazon owns over 100 planes in the United States and Europe where they used to obviously transfer freight around. What they've noticed is now they're having a lot of excess capacity, so they're looking to shed that off and maybe sell it to maybe the Postal Service, maybe other freight carriers. They've hired some specialists in that case. Certainly a deflationary type development when it comes to Amazon. Now, speaking of air and speaking of Amazon, Amazon Prime Air drone deliveries began just in time for Christmas over here in California, in Lockford, California, just north of where I grew up. And in College Station, Texas, you should be able to order certain items on Amazon and have them delivered via drone. We'll see how those testing goes. Obviously, very deflationary if Amazon can start delivering packages via robot. Moving on to Netflix, start of the week at 287, melted up 1.5 points. End of the week closer to 291. Year to date, this one's down big, down 51%. But if you look over the last 6 months, this thing's been on fire, up 66%, a tale of two halves when it comes to Netflix. The company established its 2023 executive compensation plan. Looks like about a base pay of about $3 million for the top executives, with escalations into the tens of millions of dollars for those gentlemen. Moving on to NVIDIA, start of the week at 146, down roughly 2%. Year to date, you're down about 52% on this one. Over the last 6 months, fared a little bit better, been a little bit up and down for NVIDIA, down about 5% over the last 6 months. Taiwan Semiconductor obviously supplies a lot of the actual chips to come companies like NVIDIA. Looks like they're going to begin 3 nanometer production, and that demand for that is likely very strong. Not exactly sure if NVIDIA has demand or a lot of demand or need for a 3 nanometer product, but obviously that is where things are moving. Moving on to Google, started the week at 88, ended the week down about 1% to about $87 per share. This one down about 40% year to date. YouTube is going to need 2.3 million subscribers just to break even on that NFL Sunday ticket package deal, which is likely going to cost Google about $2.5 billion a year. I don't like this headline. I don't like this assumption. What you have to understand about the NFL is owned by some of the richest and most savvy business people in the world. They don't sign deals with Nike, with Google, with anybody to make them rich. They sign these deals to get them rich. The NFL owners, you look at how they just treat their own players. They're not in the business to make anybody rich but themselves. So when YouTube signs this deal, they're not even really looking to break even on it. They're probably trying to come close, but they're using this to parlay into advertising on NFL football games, other advertising deals to layer on top of this, layer onto Google TV and on YouTube as well. Moving on to Microsoft, start of the week at 237. This one basically flat on the week year to date. Not that bad, actually, down 29%. A third Activision Blizzard studio is look like they're going to press for a labor union. Obviously, Microsoft's got to tread a little carefully here because one of the requirements likely with a FTC clearance on this deal for Activision is that they don't squash labor unions. They don't squash the number of jobs, and they don't eliminate things like this. So Microsoft's likely going to have to encourage that going forward. Moving on to Tesla, start of the week at 116. This one, the winner for the week, up about 4%, finished the week closer to 121. Year to date, though, this one's been trashed, down 69% over the last 6 months. You're down just you're down 45% in Tesla. Now, Tesla is likely going to reduce their Shanghai, China production through January as demand is starting to wane for the automobiles in that country. That caused a lot of analysts to start lining up and either trimming targets based on revenue or deliveries at Tesla, or maybe even the price cuts as well. IRS released new guidelines for vehicles qualifying for the $7,500 tax credit that begins, I believe, probably next week here in the United States. Tesla largely a beneficiary there, but maybe less than was previously seen. Piper Sandler says that Tesla is in a tailspin, but they reiterated a $340 price target on the stock that is currently trading at $121. Tesla could extend its lead over EV competition. That's according to Morgan Stanley. Obviously, you start looking at the upstarts like Lucid and Rivian. They're having trouble from a fundraising perspective and from a manufacturing perspective. I still think the GMs of the Fords, the Audis, the Mercedes, they're still going to have more and more units come out into the marketplace when it comes to an EV perspective, but no one is still anywhere close to the capability as Tesla when it comes to manufacturing and kind of pumping these things out. Tesla is still a best idea for 2023. This is according to Baird. They did cut their price target from $316 down to $252, but again, stocks at $121. You go to $252, you've doubled. Cathie Wood, we've criticized here on the channel several times in several videos. I mean, they make some money, so sometimes having a controversial take on somebody that's well-liked can do well for your channel and for your pocketbook. But Cathie Wood, to be honest with you, and to be completely honest with you, she's timed buying stocks pretty poorly over the last year. I think even she would admit that. But she actually, when you go look at the time she's bought and the time she sold, because she sold Tesla, and we've done videos when she sold Tesla, she actually sells Tesla at pretty darn good times, and she tends to buy it at pretty good times. She loaded up on 25,000 shares this week, and maybe even more than that. I've seen that she's picked up a few more recently. Moving over to the technical segment of the show, we'll kick it off with the S&P 500. It's basically smack dab in the middle of what we've identified as kind of a 13% trading range going back for the last 6 months. Now, our volume profile is still on here. You're seeing it's sitting right at a level on that the S&P. Actually, it's just under that on the S&P 500, right at about where it's at, about 3,800. Market should have a little bit of demand here. If it breaks down and drops down here to 3,600, which is another 200 lower on the S&P 500, I'm not concerned. You're basically just going sideways still. Yes, it's a 13% kind of up and down chop. For some investors, it's too much for their tummy. For me, not really that concerning at all. Moving over to Meta, the volume profile doesn't really tell you a whole lot when it comes to Meta. We do have this very thick black line right here is acting as resistance for the stock. You've seen over really the last 30 days, it just has not been able to get over 124, 125 on the stock price, but it hasn't really dropped that much lower than that. We are creating in the micro trend, we're creating a series of higher lows. It's not really being confirmed with higher highs. In fact, more recently, you're kind of making lower highs. This one's looking to break out. Now we're on the eve of earnings with all of these stocks as well. Meta should report their earnings about 30 days from now on February 1st. Moving over to Apple, path of least resistance was down with this stock, and boy, it has followed through on that. Our first purple line right here at about 123. It's an interesting buying opportunity. You are supported with the volume profile. You've got another level underneath that at 114. Apple reports their earnings likely around January 26th. So you're less than 30 days from earnings. Wouldn't blame somebody just wanting to wait until those earnings are announced before they step in. But I tell you what, Apple at a 52-week low on a year, they were down, I think, over 25%. Probably a pretty good track record of the stock rebounding the following year. Moving on to Amazon. This one came all the way down to the bottom of our green box, which we've had on this channel for months, down here at about $82. The stock reports their earnings February 2nd. Everything in this chart just is down, down, down. It should find some level of demand at these levels, but I tell you what, I just wait until this stock shows some kind of sign of reversal, and when it does, probably will reverse relatively well. Similar to how a Netflix did, obviously on a steep monster decline, but over the back half of the year, I mean, this thing ripped harder than almost any other stock out there. Right now, it's still making higher highs, higher lows. Netflix is the first to report of this group. We're just basically 3 weeks away on January 19th. This stock will report its earnings. It'll be interesting to me to see if it sets up at the top, if it comes up here, makes another higher high, gets to a resistance point and sets up here, or if investors get a little nervous and then maybe it sets up down here at the bottom of a trading range. Obviously, over the next couple of weeks, we'll keep an eye on that when it comes to Netflix. Moving over to NVIDIA. This one looks like it with the volume profile, there's a lot of demand kind of pulling this stock down to we'll just call it 130. Looks like that's where the trend is taking this stock. It would be a back test of a downward trend line. All that would just set up to me to be like a technical buying opportunity. This stock has bounced. It has pierced through the 130 level, got as low as 110, but this is a level where there is demand for this stock. Now, complicating the situation a little bit with NVIDIA, they're actually the last to report of this group. They should report their earnings on February 22nd. So we've got a ways to go for NVIDIA. Moving on to Google, from a technical perspective, just absolutely just a thing of freaking beauty. It has been locked in this downward channel. More recently, it came back and just touched this bottom black line to the T. You actually would expect Google to actually rally in the coming days and weeks ahead, potentially as high as maybe back to $100 per share. They report, and I'm referring to Google, report their earnings on January 31st. We're looking for a bounce here. If you don't bounce here, you're dumping probably to this volume profile of about $73 per share. Moving on to Microsoft. This one looks just fine from a technical perspective. It is locked in this channel here. We are actually above kind of the midpoint. The midpoint is identified by this kind of gold, kind of yellow line. We're above that. I don't like Microsoft anywhere outside of this green box. Now, we could be setting up, I mean, the lows could be in with Microsoft, and we're setting up kind of a reversal. We're going to start making higher highs and higher lows going forward. I don't necessarily think that's possible. I think you could continue to move lower on this one, retest down here at about 210. That's a good buying opportunity for Microsoft. Finally, Tesla showed a little bit of signs of life. I mean, this thing was like a knife. I mean, it's not a knife. It was like a rocket jet, like going down without its engines working. And you saw, I mean, you really have to zoom in to see that the price action rebounded a little bit. Now, what we are seeing is, I mean, massive volume for this stock as well. That's usually a decent sign that you'll develop some demand for the stock. You would not want to get this one lower than $95 per share. You get lower than 95, the stock's got a chance to get cut in half to about $45 per share. You start looking at this from a valuation perspective at $383 billion. Company has like, I think $20 billion in cash. So, you know, financially healthy company. The problem is from a technical perspective, you're going to have overhead resistance up here at about 134. It's actually going to be converging overhead resistance with your downward channel and obviously this line as well. You've got this volume profile that's going to be sticky here at about 140 to 150. For this stock to really push up over that, you're going to need some good earnings and maybe some bullish commentary from the company. You might get that on January 25th when Tesla reports their earnings. Hopefully you guys have a wonderful weekend and a happy new year. We'll see you again in 2023, where I think it's going to be an exciting year in the stock market where you had these massive declines in all of these stocks. It would be shocking for them to follow through and follow that up with even more declines heading into next year, especially significant decline, double-digit type declines. I think most of these stocks are actually setting up for maybe some of their best years of all time. We'll certainly be here to cover it for you here on the channel. Again, Happy New Year. We'll see you in 2023. Good luck with your investments.